All right, guys, so it's the 19th of February. Let's have a review of the live trading room today. So long-term trade up here, you're fully familiar with that one. There's no point in me going over that one. Yesterday, just sort of following up from yesterday's trades, we got that bounce up, which we sold. But yesterday was a break-even day. We didn't lose. We're just saying really the FTSE's range bound at the moment between 72.90 to 74.50. Break of these levels should confirm the next direction. In the meantime, we have big dividends today, so that supports buying today. So really looking for the buys, and down towards 7,300 would have been a fantastic opportunity. Unlikely to get there though, because we've broken above 74.30. We'll cover that in a second. And also, if we did get above 7474, then we could buy 73.85. But again, at the moment, that's looking unlikely as we draw towards the end of the day. 9-point dividend today supports buying. Short-term direction, key levels 74.30. 5-minute bar. I'm okay for a break up if it's above 74.30 today. And no spike trade and no closing gap trade. So I'm not expecting the market to come down to the gap close at 73.85. And at the moment we haven't come close, so we've avoided that one nicely. Let's look at the price action. All right, so the only trade on the table today was the 5-minute bar, and you'll notice that at the open 74.30 is here. You'll notice that we spiked up, we rejected 74.30 straight away. Ian had some great stats for a break up or down today, so I kind of went with the breakdown, even though I was only going to trade buys today. So basically we took the breakdown. 2 points below the 5-minute bar is 74.17 on this particular chart. So it's just easier to use this chart for training purposes. And the stop, of course, is 2 pips above the high. So 74.33. So we're there, and basically we broke down into our sell, and then it moved up and stopped us out. But before it got to our stop, I mentioned, look, we're going to stop and reverse and buy this, because actually that fitted in with my original trade plan anyway. I don't usually stop and reverse, but that basically means that on the 5-minute bar, if you're stopped out on the sell side, it comes up, stops us out, we just immediately buy as soon as we get stopped out, and we make our loss up with the 5-minute bar break up to the upside. It's called a reversal trade because it hasn't traded the bar length to the downside, so we basically get long as soon as it breaks up. So with the 5-minute bar, often it makes sense to get half your position in on the initial break, so at 74.33, but then wait for a 50% retrace after the break. Sometimes you get it, sometimes you don't. The 50% retrace, for this example, we got this high here and then pulled down. You basically put the retracement back down to the low of the 5-minute bar. A 50% retrace is 74.28. So you're putting half your position in at 74.33 and half your position at 74.28. That balances out your risk reward, and you put your stop 2 points below the 5-minute bar down at 74.17. And then basically we said target up at 74.45, which went up and hit and made up for our loss from getting short on the 5-minute bar down here. Of course, the stop for this would have been there as well, but it didn't get stopped. It hit the target there. Since then, we've seen some lovely buys down towards this key level at 74.30. So our pro traders have been looking to buy this. It's just consolidating above this at the moment. Be interesting to see if this holds later on when the dividend comes in. But again, this key level identified in the report, you can trade around these key levels, especially when we've got we've had the breakout above it, and we're bullish on the day because of the dividend. So some nice reversal signals coming in off this key level, and yeah, we'll certainly, if we hold it, we'll probably be heading back up towards the highs at 74.60.